in the age of AI.
Okay, so NVIDIA is unbelievable stock,
Yeah.
okay? You see what we see, right? You're out here in the sort of epicenter of all of it. But what do you make of this unfettered run that this stock has been on? Yes, it's had some moments of pullback. It was at 900, it went to 750, and then it went off to the races again.
Right.
Is this too much?
Well, I think when you have to ask the question, is AI real? Right? If you believe this is really the super cycle that I believe that it is, you know, the consensus estimate for next year for NVIDIA, I think, is around $3.50 per share.
You're way ahead of that.
You know, we're closer to $5 a share. We've been ahead of the consensus estimate since the fall of 22. And what I say to my team, if the numbers are going up, the stock is going up, because the rest of consensus will have to raise their numbers.
You're
now,
like 40% above the street.
Again, there are numbers on the buy side that are as high as $5 a share. So if you go to $5 and you place a 30 times earnings multiple on that, right, you get to $150 a share. We're not that high. I don't think you need to be that high to own the market leader in AI. But I will tell you this, you know, we part of our team was in Taipei last week, and you listen to what Jensen is doing. We see the orders for GB200. We see the orders for the B200. Nothing is slowing down, Scott, because they have to place orders 5 years in advance for these products. They have to go find power. They have to find data centers in order to build these supercomputers. And so everybody has been climbing this wall of worry. Remember, I was on when the stock went to 250 and everybody said sell. And then the stock went to 400 and everybody said sell. Why? Because it went up. They weren't doing the work on what was also going up, which was revenue and earnings.
Josh Brown, I think everybody who watches our program, at least at this point, knows your affection for this name, which you've owned for a long period of time. But what about this optimism that Brad is sharing with us? And when you ask the question, is it too much? Is it too far, too fast? The suggestion here, no.
Look, I continue to feel that the biggest risk to the market is all of a sudden somebody pulls back and decides they're going to get off the carousel of just endlessly building and buying. But it hasn't happened yet. And until it does, the problem with NVIDIA, it never makes it easy, because it's not expensive enough to say, okay, that's it, I've had enough. To Brad's point, the fundamentals have been outpacing the share price growth miraculously for the last few years. And at some point that may change. At some point, we may just see a runaway train that is no longer justified by what the forward earnings are going to be. But we are not at that juncture yet. So it's a really tough name for a lot of people, because it's not egregious. It's not Cisco in 1999. And quite frankly, one of the underappreciated parts of the NVIDIA story, and maybe Brad wants to weigh in on this, people think it's just chip sales. And then like, okay, I hope they buy more chips. Once you put these chips in, you are now spending money with NVIDIA as a customer for the foreseeable future. You've made a huge investment, and now you're involved with their software, with their environment, with their services. In a way, it is very similar to Apple, but from a B2B perspective. All of this build-out with using NVIDIA chips requires ongoing spending, as far as the eye can see, with NVIDIA, and that's an underappreciated element of this. This is not just selling chips.
100%. I mean, this is the substrate of AI, right? And so it's the primitive. You have to have compute and you have to have data. And so, again, I think everybody's got to, we all know. We've come a long way fast, Scott. I'm not telling people at home to shove it all on the table and go all in today. Our net exposures are 60%. What does that mean again? Reminder for folks at home. That means I have $6 out of $10 at risk long the market in our hedge fund. I'm not all in. I'm not 100% net long, right? And at the start of 23, remember, when the rest of the world thought the market was going to crash, we were all in. Right? So I think you have to pay attention to prices. You have to assess risk reward. But there is no doubt in my mind that NVIDIA should be at the top of your list of technology allocations.
There are some who look at Alphabet, in which you were an initial naysayer on, then ended up, of course, coming back into the name, why WWDC, this is Morgan Stanley's commentary, why WWDC made us more confident in Google's generative AI leadership, because Apple's Gen AI use cases don't appear disruptive to broad-based search. That was your great worry, I think, as it related to Microsoft.
Well, I love how you say you're a Google naysayer. I mean, it was my largest position for like over a decade.
But let's be honest, though. You called out management, called out leadership, and then you voted with your feet. You walked.
Well,
you sold the stock.
I would say, to be clear, we owned the stock last year from $90 a share up to over $120 a share. We thought it got a little bit ahead of itself. We got back in this year at $130 a share. We still own the stock today, so we've owned it more than we haven't owned it. With that said, I always speak the truth, right? I don't think 10 blue links is the future. Do I think it's going away tomorrow? No. But I just look at the behavior of people. We do lots of survey work on this, Scott. People are turning to ChatGPT. They're turning to Claude. They're turning to, why are we so excited about Apple Intelligence? Because people are going to turn to Apple Intelligence instead of 10 blue links to find answers to the questions they have. So that is, over time, a threat to their core business. And I do believe, and they're making a lot of progress here under Ruth's leadership, Philip's leadership, Sundar as well. They've got to tighten the belts and get ready for this battle, because this is a different battle than the one they've been fighting for the last decade. They were dominant in 10 blue links. They are not dominant in this. There are a lot of other players in the age of AI.
What about Amazon, which Josh on the program over the last few weeks, by the way, I mean, he owns the stock, loves the stock, added to his position, calls the new Apple in terms of what they have an ability to do. They're not going to be bystanders, right? They've invested in Anthropic, done those deals, and Jassie's tightened the belt.
Right, but think about it.
You own that stock too.
I do own Amazon. Amazon's not really in the consumer game. Right? Like they tried Fire Phone, they tried Alexa, but the reality is they don't have a big consumer footprint. Why are we in Amazon? Because we think the retail business's margins are going to go up. Jassy has absolutely found religion. He's in animal mode when it comes to making sure that they're running that as efficiently as possible. You probably saw last week, they've had some turnover in the business, letting some folks go. I think they're getting more efficient. On the AWS side of the house, I think there is a question about, are they losing workloads to Azure? Is Azure out in front? I think there is a lot of worry about, if Microsoft has access to OpenAI and Amazon doesn't, is that going to put them at a disadvantage if OpenAI is a runaway winner? So they have to invest in Anthropic in order to keep up. But I think it's ownable as well.
Okay, so we're going to do this. We'll take a quick break. Brad's going to stick around. We do have a new move of sorts from Josh Brown. He just added to a position. We're going to tell you exactly what that is next. Have a big call on Uber as well. It's a big Josh position.